Hey everyone, this is Chris. Welcome back to the channel, and this is your daily Uncut news. So, as you probably know, the markets are selling off, and essentially people are scared, and for rightly so. There's a lot of the companies that are overvalued, and also too, banks keep raising interest rates, and this is all around the world. And one of the key indicators you want to be watching is what are treasury bonds doing, and essentially you take a look at this. The 2-year is at 4.08%. And the 10-year is at 3.52. So essentially, why would big money want to be putting their money in stocks that have more risk of more downside when they can guaranteed 4% return? And I understand, like for some people, like, well, it's not any great. I want to take the more risk, but that's each one to themselves. But for a lot of people, why take the risk when you don't have to? And as long as it stays elevated, it is tough for the market to do well. And as well as the 2-year above the 10-year, that also indicates recession. Moving on past that, you also have the threat of Russia. I'm sure you guys know Vladimir Putin the other day was like, we're going to use all of our weapons at our disposal. We're not afraid to use them, essentially, and this is not a bluff. One of the things that I will say regarding this thing is you got to take it seriously. They got nuclear weapons. I have heard the arguments of where, well, Chris, it's hard to use these things because there could be dissension in the ranks, and there could be. But I've mentioned to you guys before in separate videos, when people who oppose Putin, fall out of hospital windows or fall off boats, that's sort of what's going on over there. He rules by fear. And, you can see this as well. The military of Russia, my understanding is morale is low. And so now they're basically calling up more troops, possible conscription, and as well as trying to essentially have a vote in Ukraine and say, hey, everyone, this is officially Russia. And if you, attack anymore, this will be a direct attack on Russia. And they're going to prolong it. Winter's coming, though, soon. And I do expect energy prices to go up, and we'll see if there's a tampering down the fighting with the cold weather. I mean, we're going to see. Also, too, I'm sure you guys know, we raised interest rates yesterday, 75 basis points, and essentially Goldman Sachs and many of the banks are now saying they're going to raise it even more. And this is something that I want to mention, and I think it's a real thing. I think many of the media, many people on YouTube, and many of these banks are essentially lying to you the last couple of weeks. And the reason why is because I noticed, I don't know, maybe around 3 weeks ago or something, where people are like, oh my God, we're just going to rally like crazy. Everything looks okay. Buy. And I kept, showing you guys charts. I'm like, I don't know what the heck's going on. Like, why are we rallying? I don't see, any good news. Like, we're going to be raising interest rates. Like, are you people freaking crazy? And, as it turns out, I wasn't wrong. It's just that I think much of the media, and this is just how it is, guys, in the financial industry, they want to make money, and they make money by managing your money. And so, they're essentially, spending all their time lying to clients and stuff like that. And one of the things I saw a story, and I think it was buried, and I just mentioned over and over again. Institutions are selling, but retail is buying, and it's not something that is widely talked about. But again, I just think there was just so much corruption in the last few weeks of like telling people that everything's okay, but it was just like, what are you talking about? And so I do guys hope you understand what I'm saying. I tried to just show you the numbers, like look at treasury yields and stuff like that. And then even that Jim Cramer dude on CNBC was like just a few weeks ago saying, oh, everything's great. It's like, I don't know what these people are talking about. Also too, that there's a lot of corruption with our big banks, and I mentioned this one also, and I want to reiterate again. The Jamie Dimon dude, he's the CEO of JP Morgan. He was complaining that the banks have to have a bunch of cash on reserve, and that they essentially want to be lending out more money, et cetera. And the deal is with this kind of stuff is they basically want the government to come in and bail them out, and they also want the freedom to lend out money as much as they can on risky stuff. And it's just a bunch of nefarious things. And so one of the things that I noticed as well, if you read the headline thing, look at the headline: big U.S. bank CEOs to be grilled by Congress on consumer/social issues. And this is why I think a lot of this stuff is BS, is because and among the left and right in USA stuff, people are going to be arguing about, gender in the workplace and race in the workplace and blah, 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 blah. Here's the thing. What's going on is like, that's a smokescreen, right? I think that stuff is a smokescreen. And I think what's really going on is the banks are trying to have more corruption, trying to get the government to bail them out, how to get the government to loosen regulations, and just banks are trying to play the system. And I'm not saying I don't care about social issues, but I am saying I think that stuff's all a smokescreen, and people in the, essentially the big media, I'll just call them big media. I don't like to say mainstream, I'll say big media, are going to be fighting over whether or not, that there's gender discrimination in the workplace. Not that I don't care about stuff, I do, but I'm saying I think that stuff's a smokescreen for what's really happening, which is bank corruption, if you guys know what I'm saying. And the reason why I say that is like I see this kind of thing of where Credit Suisse is like reorganizing their bank. They're going to divide into three. And what they're doing is that they're setting up sort of like one part of it to have the risky asset part, and they're trying to like basically shelter themselves from risk. And I feel like that's what Jamie Dimon, JP Morgan as well, is they're like trying to work out negotiations and regulations to get the government to like, hey, help us out, negotiate risk and then bail us out if we cause any more problems. I lived through 0809, and the system's corrupt. That's all I have to say about that. But I just feel like, man, it's just happening because I see this kind of stuff as well. Is so much everyone's just kind of struggling and trying to figure out how they can game the system. I mean, one thing that's happening as well, and this is kind of interesting. So essentially, the Bank of China is trying to keep the yuan stable, but the regular Chinese people are like, screw that, I'm buying dollar. And there's so many people out there doing that right now. That's why dollar's so strong, is because when you're really unsure about stuff, and I think the Chinese economy, Chinese Evergrande thing could be much bigger and worse than people are letting on, because I keep seeing these kind of weird stories pop up, and I'll show you in a second what I mean by that. Is something like this. I see this kind of thing pop up, and this is what this was, and you're like, okay, how's this connected? So this is in Korea, and they've been noticing like these weird, abnormal foreign currency transactions. You can see there's $7.2 billion. It's not small money, and this is money coming in and out of the country like via Hong Kong. And it was like via Hong Kong, China, and a couple other countries. But this is essentially money laundering. So you have basically a domino thing happening in China. You got money laundering going back and forth from Korea. This is also involving crypto, and as well as you have the weakening yuan, and then you have the U.S. banks trying to like, hey, can we lend more money because we want to make more money, and then you have Credit Suisse like, hey, we're trying to divide up our company to deal risk better. I just feel like there's a lot of corruption going on right now, and that's why I'm pointing this stuff out to you guys. As the raising interest rates are coming up, I think it's going to expose a lot of over leveraged people, right? So essentially, it's not just people, but institutions or even businesses or hedge funds, et cetera. If you borrowed a bunch of money and you're making payments on stuff and you're doing trying to manage your debt and your income coming in, and suddenly everything's all out of whack because you essentially borrowed too much. You're trying to figure out a way, okay, please let me borrow more so I can pay back, borrow from Peter to pay John kind of thing. It's all corrupt. That's the theme of today's story. And Bank of Japan, which is interesting as well, is they're facing a different problem. The basic gist of it is that there's very little growth in Japan. They have an economic problem there in terms of GDP, very little growth, and they also have very low birth rates. And so if the Bank of Japan, wanted to strengthen their currency, they could like raise interest rates and try to like defend the Japanese yen. But the problem is that would slow growth, and so they're in a real hassle right now, in a real pickle, I guess you could say. So I do worry about Asian currency collapse. We are currently in Korea. I've told you guys several times. I kind of saw this coming, and so we decided to come here because I've been telling you guys the dollar is like really strong, and if you want to live abroad right now, it's just a really good time if you want to go travel because it's really strong. I'll give you an example. As of today, it's $1 to like around 1,400 Korean won. Generally speaking, when I was here, a while ago, I think a regular exchange rate would be like $1 to 1,100 Korean won. So you're looking like a 300 jump. It's like a massive jump, and it's you keep seeing these records of like the Japanese yen to the dollars, like the biggest dollar strength in like 20-year history kind of stuff. You'll see it against the pound. You'll see it against the won, against the Chinese yuan. It's crazy. All these things happening, and you look at this as well as you look at the Buffett indicator. This is indicating 31% above the trend line. Take a look at this stuff for yourself, guys. You'll see it. That indicates overvalued. Schiller PE, we're at 28.37. If you don't understand this is like the last 10 years adjusted for inflation. What's the price of our market compared to the trend? The mean is at 17. We're trading at 28. So clearly that is overvalued. And also too, you can take a look at this. This is just the regular PE. We got 19.15. The mean is around roughly 16. So also overvalued. So you use these things to get a general sense of where we are in the market. When I take a look at global stocks are all selling off, right? Because essentially, again, people are retreating to safety. You're also looking at Norway's raising rates, although they're saying they're going to end soon. It's hard to say because everyone is like balancing out. So the basic gist, if you understand this fiscal policy, is if I raise rates, it slows down my economic growth because essentially cost of money goes up, right? But if I leave rates too low for too long, it spurs on inflation. So this is essentially why the Fed is always talking about neutral. They want to be in a situation where they're neither stimulating the economy nor hurting the company or holding it back. Another thing that's really interesting is something going on with raw materials. Copper is under focus, and copper is going to be a similar situation that oil was during the pandemic. So the basic gist, if you guys don't know about the oil situation, was that during the pandemic, no one's driving, no one's flying, people aren't using oil. So the oil companies are like, okay, we're going to turn off the oil spigots, right? And then suddenly, as the world reopened, there's a big demand for oil, right? But because they turned it off, there was underinvestment in that industry. And so it took them a while to get it back going. So we have a very similar thing with copper. And the basic gist of it is that copper prices, right? It's for the price to sell it and the price it takes to actually produce it. It's not worth it for them at the moment. And so they just basically cut back. It was too expensive for them to get copper essentially. And now we're looking at a shortage because, and it's kind of funny, because it was too expensive for them to make it. Then the price goes up because there's not enough of it. And then suddenly it becomes like, okay, how can we get a balance in this thing? And then copper comes from Chile and Peru. And they have all these problems down there. Like I said, it's the cost to make the stuff. Now, copper, you guys can see this. It's used in batteries. It's used in wiring, cables, etc. And some of the countries that are developing via Vietnam, Mexico, India, you guys can see this right here. Their needs for copper will only continue. And I can tell you guys, we lived in Vietnam. There's a lot of construction over there. And here's the thing interesting about copper. And it's funny, we never really talk about copper in the channel. I just saw this article and reading it. I'm like, oh my God, we're at a shortage of copper. And I knew that copper was a thing, and I knew that lithium is a thing as well, because in a battery powered world, these are the kind of things that we're looking at. But when there was essentially a sort of deficit of copper of 2%, this was 2021. Then the price of copper shot up to 25%. So, which is kind of crazy. And they were saying here, this is the S&P's projection, but this is the worst case scenario. So don't think it's going to be like this, because I think it'll get fixed by then. But they're just saying, like, by 2035, because the demand for copper is going to keep rising, we may have about a 20% deficit in copper. But that's 13 years from now. Point being, we're going to need copper for the future. Also, too, around the markets, this will probably get buried as well, and this is sort of why I try to bring these stories to light. The FTC is looking into Amazon and to what's going on with their Prime membership. The basic gist of it is that, like, the way you sign up and cancel may be a little bit nefarious, to where, like, they make it difficult for people to cancel, kind of thing, or they extend it a little bit longer, that kind of thing, or they get people to, like, kind of ninja sign people up, because that's the kind of thing where it's like, maybe whatever it is, like $10 a month, and people don't not notice it, and you start siphoning money. So they're going to be looking at that. That's the FTC protecting consumers. And the reason why I bring that up is because there's going to be a lot of these kind of things going on. It's sort of like when the economy goes bad, recession hits, everyone's going to be scraping for every last nickel, the same way that Jamie Dimon and JP Morgan are, like, scraping with the government, like trying to fight for every last nickel, because the money's not flowing anymore. And so the way the government will be adding on extra taxes or fines to scrape for every last nickel, companies will also be fighting for every last nickel. This also relates to the Elon Musk situation. People have been vacating Twitter once he started talking about takeover, because, like, there were rumors of layoffs, and you guys know how rumors fly around the office, like, oh, well, I think this department's getting dissolved, etc. And so people want to be proactive and leave the company before getting fired, because frankly, from an individual's perspective, you're way better off leaving before you get fired, 100%. And also, too, regarding inflation, sort of the thing I wanted to talk with you guys about, I've said this many times on this channel, to where regardless if there's official call for inflation or not, right, there's going to be people hurt by the rising prices. Whatever inflation is, or wherever there's recession, right, regardless of what the official numbers are, there's people already hurting because of rising costs. And people that get hurt a lot are people on fixed incomes, because essentially what it is that their incomes just don't rise fast enough to where the prices are, right? So even though your income is going up, your real purchasing power actually could be going down. And so this is actually something that is very, very expensive. And, I'd love to hear from people in the comments if you've experienced if you're taking care of your grandparents or your parents, and you feel like the cost of all these things are going up, either senior living or medicine. And I know that this stuff is a serious, serious expense in the USA. And the last thing, which is also related, is when we go into recession, a lot of these very experimental companies, these sort of like pie in the sky kind of things. In this case, it was the Google co-founder Larry Page. He's like, hey, everyone, we're going to build flying cars. Why? because flying cars are cool. And so, and I don't disagree that flying cars aren't cool, but when the money cools off and when the fervor cools down, this kind of stuff starts to shut down. And so this is kind of why I put these two together with you guys. I want you to understand that, costs of serious things that are necessities like senior living and medicine, when those costs go up, people have less money to throw into like flying car kind of stuff. And who knows, maybe we'll have flying cars in 15, 20 years, but this particular year is not the year that people want to invest in experimental things that don't make a ton of money. So I hope you guys understand how all of these things fit together with rising interest rates, lack of appetite for risk, and sort of where people are putting their money. And it's just been dollar, dollar, dollar. It's what it seems like. Now, I don't know how long this stuff's going to last because people say, hey, Chris, where's the bottom? I can't tell you exactly, but I can say, look for unemployment to spike. We definitely need unemployment spike to break inflation. Also, to pay attention to sort of like what is the signaling from the Fed. I think you guys know that stuff already. The other thing I'm looking at is I look at the indicators, the Buffett, the P ratios of the Schiller, et cetera, and have a general sense of where we are. And the last thing I keep saying it over and over again, until we get that crazy fervor, meme stock, crypto stuff out of the market, we may still be in a bit of a bubble. So I do appreciate everyone's time. Hope this is fun for you and useful. Do appreciate comments, and I'll catch you in the next video.